You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. Asian markets have opened mixed as investors digest China's additional fund flow and OPEC's decision. Turkish President Tayyip Erdogan seals his position as the president for a second term. OPEC members and its allies decide to hike crude production by 1 million barrels a day. And Infosys is set to move on to the next stage of digital growth with a 5-year strategy, according to its chairman Nandan Nilekani. A quick check on the international markets. Stocks on Wall Street ended mixed on Friday. The Dow Jones snapped its 8-day decline. The benchmark, however, posted their biggest weekly loss since March. Abigail Doolittle is here with the summation of what transpired on Friday.
Stocks finished mixed in Friday's Wall Street session. Both the Dow and the S&P 500 did climb on the day. The Dow rose by about 0.5%. The S&P 500 climbed by 0.2%. But the tech-heavy NASDAQ, that index did drop down about 0.3%. But with the Dow climbing for the first time in 9 days, the Dow did, of course, snap an 8-day losing streak. But you wouldn't be surprised to know that on the week, the Dow is down for a second week in a row. And in fact, the S&P 500 down on the week as well, as was the NASDAQ. For the S&P 500, that's the first down week in 5 weeks. So interesting action there for the major averages on the week. Slightly bearish. As for Friday's session, the S&P 500, 9 of the 11 sectors were higher, led by energy, up 2%, in sympathy with oil, up more than 5%. Its best day since November of 2016. This as OPEC did reach a supply boost deal, but it was smaller than some had anticipated, giving a bullish boost to oil and the energy sector. The top performer there, Marathon Oil, up more than 7%. As for one of those two sectors trading lower on the day, tech, not down a lot, but Red Hat, the software maker, down sharply, down more than 14%. Its worst day since 2006, as the subscription software sales did not meet estimates. Guidance was a bit disappointing. Those shares sagged and also brought some of the other software companies lower, including Salesforce.com, Microsoft, Citrix Systems, among many others. But overall, with modest gains for both the Dow and the S&P 500, as Haven bonds did pull back, there were some tones of risk-on appetite in Friday's Wall Street session. In New York, Abigail Doolittle, Bloomberg News.
All right, and President Recep Tayyip Erdogan in Turkey has declared a decisive victory in national elections yesterday, lengthening his 15-year grip on power and granting him vastly expanded authority over the legislature and the judiciary. Bloomberg's Ben Holland has a detailed report.
Well, I think it is more sweeping than was expected. There were two elections going on. One was for the presidency, one was the parliamentary vote. And beforehand, opinion polls had suggested that Erdogan might not win the presidency, at least in the first round of voting, where you need 50%. And he did. And the opinion polls also suggested that his alliance might not win a majority of parliament, and it did. So from that point of view, it was a better result than expected. I guess the only drawback from Erdogan's point of view is that his own party didn't win a pure majority in parliament. The coalition that it's part of did, but he's now kind of dependent on a partner in a way that he wasn't before. So that's a slight drawback, but it was a pretty sweeping win. Before the election, the lira, there was a serious run on the lira. It lost 20% of its value in a few months. The president resisted raising interest rates, and then he kind of conceded that point to the central bank in the last few weeks, and the central bank did raise interest rates. But Erdogan was saying that after the election, he would take personal and direct control of interest rates. And from everything we know about what he feels about interest rates, that means that they won't be going up anytime soon, because he has consistently argued that lower rates are needed for the Turkish economy, which is the exact opposite of what most economists say.
All right, a quick check on some of the Asian markets. A little early to tell you about the Chinese markets. They've just about opened up. but it's at this point seemingly that the Chinese benchmarks are the only ones in Asia in early trade that are trading positive. The Nikkei has been trading lower. It's down about 0.4%. S&P 500 down a few ticks. The Hang Seng also opened lower, about 0.1%, and the Kospi down about 0.3%. China seemingly bucking the trend because of the announcement by the Chinese central bank about the monetary policy stimulus that is being provided, essentially cutting the amount of cash reserves that some of the banks have to hold in order to boost lending. But we'll get back to that a little later in the day. For now, let's turn to the outlook for trade in India. Darshan Mehta is here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Morning, Darshan. So initially, I think we were talking, and it's muted cues for or not clear cues for India at the start of trade.
Yeah, because the SGX Nifty has suddenly fallen significantly. It was down some 20 points. Now it's down over 50 points in trade. So weakness in Asia is certainly impacting that. Now, if you see what's happened, the SGX Nifty is below the 10,800 mark in trade. It's down 55 points. But over the past few days, we've seen that, the rally always continues. It manages to pick up in the second half of trade. So interesting to see how our markets open. Most of the ADRs ended with a positive bias except for Dr. Reddy's. ICICI was up almost 0.6%. Infosys was up almost 2.7%. Wipro was up almost 1.5%. HDFC, Dr. Reddy's was the only one that ended with a negative bias. So this is what happened as far as the ADRs are concerned. Now, how did our markets pan out in trade? The Nifty was up 80 points, strong rally that came in, but a significant amount, but the Nifty managed to trade much better than the broader markets, the mid caps and small caps, which were also up in trade. Even the Nifty Bank managed to end at the highest point of the day. The Nifty Pharma was up almost 1.8%. FMCG index was up almost 1.1%. So serious amount of traction was seen. What didn't do well was the Nifty Energy Index, which was down almost 0.8%. Now, if you're looking at the sectors which have been doing well in this month, the Nifty Pharma is up almost 14%. The Nifty Energy, which was weak in trade on Friday, was up 3%, and the Sensex was up almost 1% in trade. What didn't do well is the infrastructure, small cap and metal, and they continue to bleed given the fact that these are high beta counters. Now, as far as last week was concerned, last week the Nifty Bank clearly outperformed. It was up 1.3%. The Nifty Pharma and Sensex were also in the positive territory. What didn't do well last week was a significant amount of selling on the metal side, the PSU bank side and the small cap side, and that's what also impacted in their month-to-date performance. Now, the other factors is these are the counters trading at record highs. So the Bajaj companies, the Bajaj Finance, Bajaj Finserv doing well. Bajaj Holding, which is a holding company for the other two, is also trading at a fresh 52-week high. Page Industries and Dr. Lal also managed to move up significantly in trade. Now, at 52-week low, a lot of companies have started to move out. Bank of Baroda, BEL, there is HCC, NBCC, PNB Housing, Dalmia Bharat, Kajaria, Motilal Oswal. So these are the counters which are trading rather weak in trade. Now, as far as flows are concerned, FIs sold in almost 1,300 crores in the cash market. DIs were biased to the tune of 1,100 crores in the cash market. So that's what exactly happened. And on the FNO side, in the index future side, 67 crores of net selling. Index options or buying of just 2 crores that came in. So overall, just muted 117 crores selling by FIs in the FNO market. Now, if you're looking at what happened with the wicks, the India wicks was down almost 3% in trade. Again, below the 12 level, given the fact that the Nifty is rather strong. Now, the Nifty was up 80 points. The HDFC twin managed to come out with, moved up significantly. There's also Goldman Sachs upgrade that's come in on HDFC. So probably that will be in focus. ITC and Sun Pharma rallied. What didn't contribute and was one of the reasons that the Nifty didn't have a 3-digit move was Reliance, which contributed a 17-point downtick. Now, if you're looking at what happened on the futures and options side, the Nifty on Friday saw short covering. Open interest was down 3%. The Nifty was up close to 1% in trade. The Nifty Bank saw fresh buying that came in. Open interest built up was 6% on the long side. Now, the other factors is where were positions taken. Put writers became much more aggressive at 10,700 and 10,800, and call writers were forced to shed positions since the market rallied 80 points. If you look at the total open interest build up where it is, it continues. There seems seems to be very strong support that's coming in at the 10,700 level. So 10,700 to 11,000 is the broad range that the market is showing at this point of time. As far as the F&O ban stocks are concerned, Dewan Housing and JP Associates continue to be in the F&O ban. You had Infibeam as well as CG Power that were there in the F&O ban. New in the F&O ban is IDBI Bank, which was up almost 2% in trade. As far as the put call ratio is concerned, the Nifty PCR moved up from 1.48 to 1.65. As far as the Nifty Bank is concerned, the Nifty Bank moved up from 0.81 to 1 level on the Nifty Bank side. Now, if you're looking at stocks in focus, first of all, India Cements saw short covering, open interest was down 6%. The other stock in focus that I want to talk about is Ambuja Cements, which again saw short covering, open interest was down 10%, and a cement price hike that has come in that will also impact them. SRF saw a fresh shorts, open interest build up of 34% on this month's series on the June futures, and Sun Pharma saw short covering again. Open interest was down 4% and the counter was up 4%. So that's what we're seeing, Alex.
All right. Thank you so much for that, Darshan. You know, the big story of the weekend, though, is the fact that oil prices jumped the most since late 2016 after OPEC members and allies agreed to a moderate hike in output going forward. Adam Haig of Bloomberg News tells you everything that you need to know about that meeting.
It's been a kind of a slow, steady grind up of late, and that big move that we saw on Friday, as you say, it was a smaller than expected increase, but it's still enough to trigger an almost 5% move in crude, which is huge on a single day. Whether or not we're testing that kind of $70 level at the moment and in future months, I think largely relies on whether we get a bit more of a spread increase. As this chart shows, you know, the difference now between WTI and Texas crude, it's very crucial at this point whether you get a little bit of a blowout there. Whether it's a bullish sign or not, I mean, it comes back to the more broader picture about what the oil price means for global inflation at this point in the cycle. Inflationary pressures starting to kind of show in many economies, but a lot of people still struggling with inflation not as strong as they might like, and central bankers continuing to talk to that theme. So if oil prices do continue to tick into the 70s and higher and sustain there, then clearly for inflation fundamentals, that's surely a good thing.
Now, with regard to the higher production that's required and what was agreed on, Saudi Arabia's Energy Minister Khalid Al-Falih said that as certain countries will not be able to produce more oil due to sanctions, the responsibility will indirectly fall on Saudi's shoulders. Listen in.
There will be indirectly a reallocation of cuts, and I think the JMMC's focus, rather than on adherence to certain specific numbers per country, is going to be to stay within the 100%, not to overshoot in a way that will hurt the market by oversupplying crude oil, but at the same time not to be overly strict and putting a pro rata cap on each country that doesn't allow us to get close to the 1 million. So the exact allocation on a country by country for those who can will be the job of the JMMC to discuss. Some of it will depend on available capacity, which we need to have an honest discussion about who can do what. But we, as Saudi Arabia, obviously can deliver as much as the market would need, but we're going to be respectful of the 1 million barrel cap and at the same time be respectful of allocating some of that to countries that can deliver it, and that will take place in the next few days and weeks as we open that dialogue and allow the GMMC to do that allocation.
Meanwhile, Iranian Oil Minister Bijan Namdar said that the US President Donald Trump is going against the fundamentals of the oil market, and it will be against the interest of the OPEC members to follow the instructions of the United States. Here's what he said exclusively to Bloomberg's Anne-Marie Horden.
I believe we have overcompliance from Saudi Arabia, from Qatar, from Oman, and from Oman. And I believe we have overcompliance from Saudi Arabia, from Qatar, from Oman, and from Oman. And I believe we have overcompliance from Saudi Arabia, from Qatar, from Oman, and from Oman. And I believe we have overcompliance from Saudi Arabia, from Qatar, from Oman, and from Oman. And I believe we have overcompliance from Saudi Arabia, from Qatar, from Oman, and from Oman. And I believe we have overcompliance from Saudi Arabia, from Qatar, from Oman, and from Oman. And I believe we have overcompliance from Saudi Arabia, from Qatar, from Oman, and from Oman. And I believe we have overcompliance from Saudi Arabia, from Qatar, from Oman, and from Oman. And I believe we have overcompliance from Saudi Arabia, from Qatar, from Oman, and from Oman. And I believe we have overcompliance from Saudi Arabia, from Qatar, from Oman, and from Oman. And I believe we have overcompliance from Saudi Arabia, and some other countries a little. They can produce more, and for Venezuela, if they can produce more, we have no difficulty, can send more oil to the market.
Can other countries pick up some of the production lost from Venezuela?
No.
This increase, or as you're describing it, decrease of the cuts. What do you make of that? Do you think this was a victory for the Saudis?
Officially, they didn't say so. But based on the reports that we receive, these are pressure on the OPEC and maybe some OPEC member countries. It's a strange thing for me that President Trump put pressure on some OPEC member countries to limit their production and impose the sanction against them like Iran. And at that situation, wants OPEC to remedy its action against the market, because I believe that President Trump is doing against the market fundamentals, against the market, against the free market, and it's not on benefit of the even consumers at the high level price caused by the action of President Trump.
Speaking of President Trump, following this meeting, he tweeted yet again about OPEC and high oil prices.
Yes.
What's your response to him?
I think OPEC shows that it's an independent organization, not part of the Secretary of Energy of United States, and it's very bad for United States and OPEC members to follow the instruction of United States.
Now, understandably, the focus has been on oil this weekend. And with that, let's shift focus to the commodity space overall. Jayesh Khilnani has all the updates there, starting with oil, of course. Morning, Jayesh.
Morning, Alex. So oil prices did surge on Friday as much as 4.6%. That was only for WTI, though, which is the most since late 2016. Now, that came on the back of lower than expected production increase by OPEC during the Vienna meet. So what they've done is OPEC has actually agreed to increase the output by about 1 million barrels per day. But many members believe that the actual output increase may be to the tune of about $700,000 barrels. That is because of the inability of some of the nations to pump in more oil. And as far as brokerages are concerned, we have one note from JP Morgan which states that the barrels will likely hit the market during the fourth quarter of the current calendar year. So that's as far as the oil prices are concerned. But if you look at the screen for the base metal space, the index itself snapped its 6-day losing streak on London Metal Exchange. Zinc posted its biggest weekly loss since December of 2016. That was in focus. And we had nickel and lead, which gained more than 1.5% each, while we had aluminium, zinc and tin, which ended lower on Friday's session. Now, if you look at the screen for Shanghai Futures Exchange, the base metals are indeed trading with a mixed bias. As far as gold prices are concerned, we are seeing some bit of uptick come about for gold prices for the second straight day.
All right, thanks so much for that, Jayesh. Let's take a check on the rupee in the bond market now. And Saloni Dhanuka is back with us after a long while. Morning, Saloni, and welcome back.
Thanks for that, Alex. Talking about rupee, after two straight week of losses, it ended with modest gains against the US dollar on Friday. Now, the home currency rose past the crucial $68 mark and ended 17 paise higher at 67.84 levels against the dollar. Now, remember, the rupee depreciated to its one-month low last week of 68.39 levels after US Fed Chair reiterated their commitments to more rate hikes this year. Well, speaking of the bond market, sovereign bonds capped their biggest weekly gains in 2 months after central bank minutes showed that policymakers were more dovish than they were expected to be, and hence we have seen the 10-year benchmark bond yields dropping nearly 7 basis points last week, its biggest weekly drop since April 6th. And on the global front, President Trump escalated global trade war fears, and hence we have seen dollar index easing from its 11-month peak, and it is now trading flat near 94.50 levels. And elsewhere, speaking about euro, it rebounded from its 11-month high against the dollar after Eurozone creditors agreed for a debt restructuring program with Greece, and also positive macroeconomic data added to the sentiments. And lastly, speaking of the dollar rupee now, it is trading 40 paise weaker at 68.22 levels against the dollar in the non-deliverable forward markets, which indicates a weak opening for Indian rupee in today's trade, Alex.
All right, thanks so much for that, Saloni. Let's move on now to an update from the IT space. IT major Infosys held its 37th annual general meeting in Bengaluru on Saturday. The company laid out a 5-pronged strategy to drive growth in the digital space. It also set a 3-year roadmap for the same. Nishant Sharma, who was at the AGM, is here with the key takeaways. What was the mood like at the AGM is what he's going to tell you about.
Well, in the 37th annual general meeting of Infosys, the mood was largely optimistic amongst the shareholders, and they were really confident regarding the growth of the company going forward. And Nandan Nilekani was attending his first AGM nearly after 8 years, after he took down as the charge of non-executive chairman at Infosys last year. Now, this is also Salil Parikh's first AGM after he took over the charge as the CEO of Infosys earlier in January this year. Now, some of the key highlight of this year's AGM is that the Infosys board and management were really focused on getting this message across that the board is stable and united, and the complete focus is on the growth of the company. Nandan Nilekani in his address mentioned that the priority is to get the strategy right under the leadership of Salil Parikh, and Salil Parikh in his address mentioned that they have developed a 5-pronged strategy within the digital space to drive growth, and for that they have set a 3-year roadmap to achieve those objectives. Now, as far as the shareholders are concerned, they were largely optimistic of the fact that Nandan is at the helm of everything, and they were not really worried about the corporate governance issue that really plagued the company last year. But some of the key issues that really highlighted the raise during this year's annual general meeting were that the first is the sudden entry and exit of the top-level executives. Shareholders are of the view that this should be handled carefully. Now, the other issue was that the shareholders highlighted was the issue of declining revenue of the company. But one of the issues that really stood apart at this year's AGM is that they was really concerned about the corporate governance issues regarding the acquisition strategy of Infosys, referring to the acquisition of Panaya, which didn't really go well in the favor of Infosys. Most of the shareholders were really concerned about the acquisition strategy of the company. Now, Infosys took note of the concerns of the shareholders, and they said that they follow all due diligence for acquisitions going ahead, and they are monitoring all the acquisitions really very carefully.
All right, and let's listen to some of what Nandan Nilekani and Salil Parikh had to say on the road ahead for the company.
We are at a very exciting juncture in the journey of our industry. I have never seen as many possibilities to partner with and grow along with our clients as I see today. Every industry, every sector is undergoing tremendous transformation driven by the digital revolution that engulfs us. We are seeing the rise of new digital challenges pervading every space, whether it's media, entertainment, healthcare, financial services, retail, or pharmaceuticals. I am convinced that there is no better time than now for us to strategically chart our own journey as a company as well. A company that has the insights, the blueprint, the ability and the skills to be successful in helping clients participate in what's happening around them, adapt and thrive. And I'm delighted that in the last several months, we have done so many things together to really position ourselves very well for what's next.
With that in mind, we created a strategy which is really resting upon 4 pillars. The first pillar is how do we build a new business in what is called the digital world. We already have a very successful business, and I will show you some examples of that. But the future in terms of where all of our clients are going, it depends upon building and scaling what we call the agile digital business. The second, we want to make sure that everything we've been doing for our clients so far in their core areas is further energized, and we are leveraging it with artificial intelligence. The third, we want to make sure that we expand the skill sets of all of our employees, and we provide an infrastructure that allows them to develop their own skills at the pace that they want as the market demands that. And the fourth, we want to make sure that localization in many of our markets becomes a part of our future so that we become part of the new ecosystem as we grow, whether it's the US, in Europe, or in the Australian markets. Within digital, as Nandan shared with you, we developed a 5-pronged approach on which areas to focus on. And this is a comprehensive architecture that we have built with our teams, with our lead of strategy, and with all of the management behind it to drive the future.
All right, those are the comments coming in from the management of Infosys. But with that, let's turn to Shraddha Babla now, who's coming in with the stocks in news. Shraddha, what are the stocks in your list today? Morning.
Morning, Alex. I'm going to start off with Biocon, which has received an establishment inspection report from the US FDA. This is for the sterile drug manufacturing facility at Bangalore. That apart, you also have Dish TV, which is offered a public sale of 50 crore shares at the price of 74 each. So that's an open offer for 26% stake, and that is, of course, in the back of the Videocon D2H merger. You have Symphony, which has acquired 95% stake in an Australian cooling appliances company for 220 crores. This is to diversify the seasonal dependence that they have in India, so watch out for that name. You also have Phoenix Mills, the company's arm has acquired retail development space in Indore, that is for 234 crores. That, they said, will add 1.1 million square feet of retail space, another stock to watch out for. IDBI Bank, of course, will continue to remain in focus. Now, according to government and regulatory sources, the government is said to have approached the IRDAI regarding the stake sale in IDBI Bank. Remember, we've said that the government could look to sell up to 40% stake in IDBI Bank to LIC, and for that, the government is looking for an exemption on that IRDA cap of 15% equity shareholding by LIC in individual companies. We've heard that the IRDA board will take up the matter on 29th of June, but that's another stock to keep an eye out for. And there's an ET report that says that it's HDFC and Kotak Bank which are eyeing PNB housing finance stake. They've said that it's Carlyle and PNB both want to sell their 33% each stake that they own in the company to a large investor. The deal is expected to fetch PNB about 6,000 crores or so at the current market cap. So PNB is another stock to watch out for, Alex.
All right, thanks so much for that, Shraddha. Now, there's clearly lots to talk about over the course of the day, including crude oil prices, all the implications of the recent elections in Turkey. But you'll find all that and more on Bloomberg Quint Live. But there are also several stories that are currently on the website, bloombergquint.com. Here are just a few of them. I briefly mentioned this. China's central bank will cut the amount of cash some lenders must hold as reserves, unlocking about $108 billion of liquidity as it seeks to control leverage and support smaller companies. The merger of Idea Cellular and Vodafone India may not be completed by the June 30th deadline, as the telecom department is looking to raise fresh demand of around 4,700 crore rupees from Vodafone India before the merger can take place, and that's a PTI report. All right, so that's a wrap on this edition of Daybreak. All you need to know is up next, so do stay tuned. This is Bloomberg Quint.